Hey everyone, this is Jeevakan. In today's video, we'll look at what is inflation and what happens if there is a rise in inflation, and finally, what should investors do during these tough times when the inflation is at all-time high. So we'll get right into the video. So what is inflation? Inflation is nothing but the rate of increase in the rise of goods and services over a certain period of time. We would have heard this common story from our parents, right? Which is nothing but back in 1980s or 1990s, the cement price was just 50 rupees and now it is 400 rupees per bag. So we would have heard this common stories, which is the rise in increase of the goods over a certain period of time. So this rise in the increase of goods is due to the inflation. So this happens over time and it is inevitable. So in the current scenario, if you look at the image over here, the airline fares has increased by 38%, energy has increased by 35%, and the food has increased by 10% over the last 1 year. So the inflation has increased to a greater extent in the last 1 year and it is sitting at a peak all-time high. Going on to the next topic, which is what happens if there is a rise in inflation. When the prices of the goods increases, obviously the purchasing power of the currency, which is rupee, will lose its value. For the money we have, fewer goods can be purchased. So this will result in people spending more on fuels, shopping, etc. 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 So in account of that, if people start to spend more, it will result in more inflation, resulting in kind of a looping effect. So these are the things which might happen if there is a rise in inflation. And the next important topic is what are the chances of recession in the upcoming days. So recession is nothing but a major economic slowdown. So there is a major debate going on between experts that whether we'll be facing recession in the upcoming days or we'll not be facing recession in the upcoming days. So I'm not a big fan of assuming things, but I believe in historical data. The historical data shows that whenever oil prices have doubled in 1 year, there was a recession. In 1991, oil prices doubled, we had a recession. In 2003, oil prices doubled, we had a recession. In 2008, oil prices doubled, we had a recession. So this has been the pattern. So now oil prices have almost doubled and we might face recession in the upcoming days. Things are not looking good as of now. In order for the things to get cooled down, the issue between Russia and Ukraine should get sorted out, and obviously the oil prices should correct a little, and then only our stock market will stabilize accordingly. So finally, we look at what should investors do during these tough situations when the inflation is at all-time high. Many people are in a dilemma whether to buy or sell during these tough situations. So we'll touch base with various factors to come to a conclusion. So what you are seeing here is the US inflation data. US inflation data right now is at a 40-year high of 8.6 in May. The previous high was at 8.5 in March and it overcame that level as well in the current month. We are sitting at a new all-time high since food, gas, shelter cost rose to a new all-time high which we've never seen before. And as a result, the US markets fell rapidly. The S&P 500 fell 3%, Nasdaq fell 3.5%, and Dow Jones fell 2.7%. And our SGX Nifty down close to 1%, and it will not be a surprise if Nifty on Monday opens below 16,000. So next week might be quite worse. So what should retailers do right now amidst these volatile situations? Looking at the charts right now, 15,700 should hold and next area is 15,000. So these two are strong supports and these two are buying zones for the investors. So these are good buying zones and retailers should see it as an opportunity to accumulate some good stocks. The Indian markets are pretty resilient and we didn't even correct more than 13% yet. So the correction of more than 20% is considered to be a bear market. So still we are in the bull run and this is a normal correction which has happened before, and people who entered last year might see it quite different because they might be having zero returns or like my negative returns as of now. Actually, it's a tug of war between the FIAs and the DIIs. If FIA loses, the market might go up, and if DII loses, the market might go down. And then at the lowest levels, if the DII loses, FIAs might again become buyers, and then and that's when the markets will have the next bull run. So finally, what investors should be doing is to diversify their portfolio. Some part of the portfolio should be in gold. So why I'm saying that gold should be in your portfolio? If you look at the image over here, towards the left is the Nifty monthly chart and towards the right is the gold monthly chart. If we can see over here, every time when there was a recession, the stock market crashed and the gold prices spiked up. In 2001, there was a recession and the stock markets crashed and the gold price rose up to an extreme high. The same thing happened in 2008 and the same thing happened in 2020. So every time when there is a stock market crash, gold will be the safe haven for people to accumulate. So every time when stock markets crash, gold came to the rescue. So because gold is considered to be a precious metal and every time when the stock market is in trouble, people tend to accumulate gold. So gold in turn will turn out to be a natural hedge to a stock market portfolio. So it's better to have 20 to 30% of your portfolio in gold, and the remaining percentages can be in stocks or in bonds, depending upon your risk appetite. So this is what investors should be doing going forward, which is diversifying our risk within gold, stocks as well as bonds, because automatically gold will act as an hedge over the stock market. Because if stock market goes down, gold will go up, and if gold goes down, stock markets will go up. So these two will proportionally act as a hedge to each other. So finally, what am I doing in this tough situations? So when it comes to investment perspective, I'm still bullish. As long as 15,700 and 15,000 is not broken on the downside, I'm still bullish when it comes to investment perspective. So I'll be purchasing some stocks at 15,700 and 15,000 as well in the upcoming days. So in our previous videos, we have mentioned that 15,000 is also a healthy correction. If you haven't watched the video, you can watch the video over here. And when it comes to trading perspective, which is in short term, I'm still bearish. Using option instruments, I've sold more calls and bought puts as well. So during the 9th June expiry on Thursday, we had a short covering rally of almost 250 points. During that time, I bought 16,000 puts, keeping in mind the inflation data which might be out on Friday. So luckily the markets were down, and I made some profits in 16,000 put as well. And I haven't closed that position, so I'll be planning to close that position Monday or Tuesday in good profits. So obviously, like everyone, even my portfolio would be bleeding, and I'd be making some profits in options as well in order to reduce the maximum loss. So this is how you play with options. So this is what I'm doing currently. In the long term, I'm still bullish, and in the short term, I'm quite bearish. Selling calls and buying put options. So that's it. Thank you so much for watching the video. Hope you'll find it useful. Signing off until next time. Cheers.